Hey everyone, and welcome to this explainer. I am absolutely thrilled to have you here today because we're going to unpack one of the most fascinating corporate pivots happening right now. When you think about the AI boom, your mind probably jumps straight to Silicon Valley, right? Big tech giants or those massive semiconductor manufacturers. But what if I told you that one of the absolutely vital picks and shovels players fueling this whole AI economy is actually a legacy academic publisher? Seriously? Today, we're breaking down Wiley's fiscal year 2026 earnings and their massive strategic transformation. We're going to see exactly how they've taken centuries of peer-reviewed science and turned it into the ultimate goldmine for the AI revolution.
Okay, let's dive into our roadmap for today. First, we'll look at their breakout year. Second, we'll explore fueling the AI economy. Third, we'll break down their growth flywheel, followed by the big Emerald acquisition. And then finally, we'll wrap up with their enduring moat. Let's get right into it.
All right, Section 1, a breakout year.
Fiscal year 2026 wasn't just a good year for Wiley. It was literally a massive period of scaling, both financially and strategically. They executed on a multi-year value creation plan that is completely reshaping their margins. First off, they posted a really impressive 15% jump in adjusted earnings per share, bringing it to $4.19. That was driven by an 18% growth in adjusted operating income. So fundamentally, they're just becoming a much more profitable operation.
Next up, get this, a massive 55% increase in free cash flow. They brought in $195 million, and that kind of cash generation is absolutely crucial because it gives them the agility to invest heavily in new tech, partnerships, and strategic acquisitions without getting over-leveraged.
And what exactly are they doing with all that cash? Well, they're returning a huge chunk of it directly to shareholders. They executed a record $100 million in share repurchases. That is a massive signal of confidence from the management team about the true underlying value of the company.
So, tying all these financial wins together, Wiley hit a record $440 million in adjusted EBITDA, with their margins expanding significantly. They also saw some really solid mid-single-digit growth in their foundational research division. But here's the number I really want you to pay attention to: 23%. That's how much their AI revenue grew, hitting $49 million and forming a rapidly expanding, recurring revenue stream. This isn't just a side project or an experiment anymore. It is a core growth driver, which perfectly sets up our next topic.
Section 2, fueling the AI economy.
To really understand why Wiley's strategic importance is just surging right now, we have to look at the macro problem facing artificial intelligence. It's summed up perfectly by a quote from their earnings presentation: "Gold in, gold out." Think about the large language models we're all using today. They're incredibly powerful, sure, but their biggest weakness is hallucinations. When they just completely make things up. And that happens because they've basically exhausted a lot of the high-quality data out there on the free public web. It's kind of funny when you think about it. We have these trillion-dollar cutting-edge supercomputers, and to stop them from hallucinating, they desperately need decades-old peer-reviewed textbooks. AI models are intensely hungry for verified, authoritative training data. Without high-quality fuel, the whole AI engine just stalls. It's a classic supply and demand dynamic. AI innovators need knowledge that isn't just completely accurate, but it's also recent and constantly evolving. Science changes every single day, and AI has to keep up. On the flip side, Wiley provides exactly that: deeply trusted, continuously updating scientific, technical, and medical data. We're talking about peer-reviewed research from some of the most prestigious societies in the world. Basically, Wiley has positioned itself as the premier data refinery for the AI age.
Section 3, the growth flywheel.
Now, this isn't just a simple, static transaction where Wiley hands over some old PDFs and calls it a day. No, they've engineered a highly dynamic loop. Let's walk through how it actually works. It all starts with Step 1, research. This is their foundational engine, and it's driving serious market share gains. That publishing output then feeds right into Step 2, content and data. Here, they're creating rich, curated datasets across vital scientific disciplines. Then that pristine data fuels Step 3, AI and data analytics, where Wiley leverages its proprietary content to actually train emerging AI models. And here's where the magic really happens. Step 4, AI intelligence. These incredibly powerful new AI tools are then used to accelerate the peer review process, uncover brand new insights, and make researchers vastly more productive, which of course feeds right back into creating more research in Step 1. The flywheel just spins faster and faster. But Wiley isn't spinning this massive flywheel all by themselves. They're powering it through an absolutely unrivaled partner ecosystem. Because they operate a capital-light model, they don't need to spend billions of dollars building the AI models themselves. Instead, they partner with the absolute titans of the tech industry. Just think about who they're dealing with here: Microsoft and Amazon Web Services. By partnering with the two biggest cloud and AI infrastructure providers on the entire planet, Wiley validates its position right at the core of the global AI tech stack. These tech giants know for a fact that to make their enterprise AI solutions indispensable, they absolutely need the trusted data that Wiley holds. But it's not just the established legacy giants either. Wiley actually has a massive first-mover advantage here, striking deals with cutting-edge AI disruptors as well. Companies like Anthropic and Mistral, these are the folks building the frontier models that are really pushing the boundaries of what AI can do. By feeding data directly to these disruptors, Wiley ensures that their proprietary content is the literal bedrock of the next generation of artificial intelligence. They're totally playing offense here.
All right, Section 4, the Emerald acquisition.
So when your entire business model is built on providing high-quality AI fuel, well, the logical next step is to go out and acquire more of the best fuel available, right? That's where Emerald comes in. It's a highly strategic addition to the Wiley portfolio. Up until now, much of Wiley's strength has really been in the hard sciences and medical fields. Emerald drastically extends their scale into the social sciences, specifically things like economics, business, finance, and engineering. And why does that matter? Because as AI models are increasingly deployed in real corporate environments, they need to be able to reason about complex markets, complex financial decisions, and the global economy. Emerald provides the highly structured, authoritative content needed to train models to do exactly that.
And you've really got to consider the sheer scale of this deal compared to its financial logic. Wiley added 485 journals, 8,000 books, and 500,000 backfile assets to their dataset. They bought all of this for 337 million British pounds, so roughly 452 million US dollars. But here's the kicker. Because Wiley can plug Emerald right into its existing global infrastructure, they expect to realize about $30 million in annual cost synergies. That makes the deal highly accretive right off the bat, delivering a solid recurring revenue stream while massively expanding their AI data moat.
Which brings us to Section 5, the enduring moat.
Now, you might be wondering, if AI developers are so brilliant, why don't they just scrape all this data for free? Or why can't a couple of guys in a garage just build a competitor overnight? Well, the first layer of defense is purely structural. Unlike random blogs on the public web, published research is fully protected under global intellectual property and copyright law. AI companies literally cannot use it without paying for it. Secondly, you can't just write some code to create a peer review network. Wiley has deeply enduring relationships with Nobel Prize-winning authors and prestigious global societies. And finally, publishing in these specific journals is practically indispensable for a researcher's career advancement and their funding. It's a deeply entrenched cultural system in the academic world.
Then, of course, there's the sheer scale and reach. Wiley holds a top 3 market position globally. They operate roughly 2,500 journals, serve over 10,000 institutional customers, and partner with over 600 different societies. I mean, replicating this kind of global footprint from scratch would take decades and billions upon billions of dollars. It's a nearly impossible barrier to entry, which means their dataset remains highly, highly exclusive.
And Wiley isn't just sitting back on this moat. They are actively commercializing it out in the real world. Think about their strategic partnerships with platforms like OpenEvidence and IQVIA. By teaming up with these specific platforms, Wiley is establishing itself as an early, dominant leader in healthcare AI. In healthcare, you absolutely cannot have AI models hallucinating patient treatments. You need absolute, verifiable medical truth. Wiley's data provides that exact guarantee, unlocking incredibly high-value, critical workflows.
So what does this all mean for the future? We are rapidly entering an era where the AI algorithms themselves are becoming commodities, and the true ultimate differentiator is the data they're trained on. As AI models exhaust the free public web, who holds the keys to the world's most valuable, verified, and legally protected training data? Well, as we've seen today with their record financials and brilliant strategic moves like the Emerald acquisition, Wiley is making a very, very strong case that they hold those keys. Thank you so much for joining me for this explainer, and as always, keep learning.